Yesterday we talked about the types of order, no depending and the instant order. I will practice it out here. And I also went ahead to send a video on how to navigate through the MT4 on a mobile phone. The video file is large and could not be sent via WhatsApp. That was why I asked us to join the Telegram group and get the video there, which I sent in case recorded of yesterday. So today we're going to be looking at market analysis. Market analysis. Haven't been able to click buy, click sell, click stop loss, click profit, do the different types of pending orders. Haven't been able to do that successfully because all we did yesterday was simply how to buy and sell randomly. And when it comes to forex trading, you don't buy or sell randomly. No, it's not done that way. Don't buy or sell randomly. Something has to always prompt you to buy or sell. And that is your market analysis. Analysis has to be done before you could either buy or sell. That brings us to what we have today, which is the market analysis. This market analysis is of three phases. And it's simply the study of the different phases of the market, which has the potential to affect your trade. The study of the different phases of the market, which has the potential to affect your trade. And it's of three phases. We have the technical analysis, the fundamental, and the sentimental analysis. Technical, fundamental, and sentimental analysis. Now, these three types of analysis are used together. The two of them are being applied together. You don't do technical and fundamental without applying sentimental. No, you incorporate the three different types of analysis for you to perform a profitable trade. And we're going to be looking at this analysis one after the other. Now, the technical, this is the study, but technical analysis has to do with the technical know-how of trading. The technical know-how of trading. I can trade. That is your technical analysis, being able to trade. The MT4 you have, either on your laptop or on your mobile device. Now, being able to identify the tools, so there's a lot of tools embedded inside the MT4. Now, being able to identify these tools, understand how to make use of these tools, and how to employ them to execute a profitable trade, that is your technical analysis. This includes studying the MT4 charts, taking note of charts, candlestick patterns, and performing a wide range of possible actions with the trading platform. Being able to effectively make use of your MT4 platform, that is your technical analysis. And this is very broad. Very broad. Everything you'll be doing with regards to trading until such a time when you can no longer trade anymore is all about technical analysis. It's very broad. The next, which is fundamental. This is the non-technical and human aspect of trading. When you're trading forex is foreign exchange, has to do with currencies. The currencies are like ambassadors of their countries. The economic condition of any country is being reflected on the currency of that particular country. And for that reason, whenever there are activities, just like economic figures, political factors, military or civil unrest, environmental disaster, change in government, or whatever, it has effects on the currency of that particular country. Developed countries, daily, weekly, or monthly, release economic data. talk about interest rates, manufacturing rates, consumer productivity index, gross domestic product. They release this data to the public. And whenever this data are bringing to the public, they affect the currency of that particular country at that particular instance when these data are being released. These are fundamental factors that you should not neglect. They also have the potential of affecting your trade. As a foreign trader, you're able to have your eyes and your ears glued to economic data. Economic data. And these are data that you will not find on CNN or BBC or Al Jazeera. No. The only thing you're going to see there is COVID-19 and Afghanistan and Taliban war. For you to have updated data of economic data on a daily basis, there are some websites you can employ to do that. There are some websites you can use to do that. Now, there are a lot of websites that give us economic data. One of them that is user-friendly and widely used is Forex Factory. www.forexfactory.com. This is one of the websites that gives information on economic data pertaining to currencies. Now, this website, it has the same interface with your phone as it has on your laptop. Now, when you log into this website for the very first time, the first thing you have to do is to check or go and change the time on the website. There's a time here on the website which is being highlighted. Now, at the first instance on this, and when you first log into this device, the time will not synchronize to local time. It will not. So you have to go and sync the time on the website so that it will be in synchronous with the local time of wherever location or country you find yourself. And to do that, simply click on the time. Now when you click on the time, this comes up. This interface comes up. When you have time zone, you drop time zone down and select the time zone of whatever country you are. Nigeria is GMT +1, that is West Central Africa time. You click on Save Settings. Once you click on Save Settings, it simply shows you that your time is now synced with your local time. Once that is done, you click on Calendar above. Once that is done, you click on Calendar above, which is highlighted on the screen. When you click on Calendar, it gives you a drop-down of all the economic data for that particular week. For this week, now this gives us a drop-down of all economic data for this week, starting from Sunday to Friday. If you scroll down, this is begins from Sunday. If you scroll down till the end of the week, which is Friday, for that particular week. Now looking at the data presented here, today is Wednesday, right? Now today is Wednesday, 15th September. This is today Wednesday, 15th September. Now, here you see a lineup of all the currencies that have economic data of today. Not just that, the exact time today. Nigerian time, but the person that you got to go and sync the time. The exact time, Nigerian time today, when this economic data will be released globally to the general public. You see time attached to it. You see time, and you see the currencies. Now, beside the currency, you see boxes of different colors. The yellow box signifies low impact. The box is actually signifies the impact of that particular news to the market or to that currency. The color of the box signifies the impact of that news to the currency. The yellow box signifies low impact. That means that information that's going to be released to the public with respect to that particular currency on that particular day at that exact time is going to be of low impact to the currency, to the market. Going to be of low impact to the market. The brown box signifies medium impact. It means that information is going to be of medium impact to the market. Then, the red box signifies high impact. The red box signifies high impact. And that is where we pay much attention on the red box. Signifies high impact. Now, for instance, today, which is Wednesday, 15th September, which is Wednesday, 15th September, the Canadian dollar by 1:30 p.m., which was 16 minutes ago, the Canadian dollar has a news release. I don't know that I was just to public 16 minutes ago. The information on this is Consumer Productivity Index, CPI. Canada released their Consumer Productivity Index for the month, and it was released today by 1:30 p.m. Nigerian time, about 17 minutes ago. And it's shown in a red box, means that it's going to be of high impact to the market. This simply means that on today, by this 1:30 p.m. today, that not passed, Canadian dollar, the movement of any currency that is traded Canadian dollar at that exact time will not have a normal movement. Any currency that has to do with Canadian dollar, talk of GBP card, Euro card, these are the Canadian dollar pairs. It means that all these currencies that are paired in Canadian dollar are going to have an irregularity in their movement at this exact time because the information that was released is of high impact. Now, you as a trader, doing your computer analysis, you wake up every morning, of course, after a morning prayer, the next thing you have to do is to log in this website, check on that particular day the currencies that obviously have red boxes attached to it. This means that at that time, when that contract release, that currency is going to move erratically. Now, for you to trade this, what you're supposed to do as a trader is 30 minutes before time, you stay away from anything that has to do with that currency. 30 minutes before time, you stay away from anything that has to do with that particular currency that has direct box. Then 1 hour later, 1 hour after, you can come back and trade that currency. 30 minutes before the time of that economic data available to the public, you stay away from it. 1 hour after, you can come back to trade that currency. Now, why I want to stay away from it is that why if I get a trade that is paired with $1, and of course, you know that the market is going to be erratic at that particular time. The information is going to propel the market very fast. But the fact is that you don't know the direction at which the market is going to be propelled. It's going to move the market to go long or to go short. You don't have that information. The only thing you know that is going to disrupt the normal movement of the market. But you don't know if it's going to move the market to go long or to go short. So the safest way is to stay away from it. This is why you're going to, so sometimes you see conditions like this in the market. You might find a market that was probably going short on a steady downward movement. Then all of a sudden, you see a spike like this. Now, these are times as a result of economic data, news release. You see a spike like this that disrupts the normal market movement. Sometimes this spike might end up closing. It might spike up, spike down, then it will end up closing like this. Even a week up and a week below. Conditions like this are out of economic data being released to the public. About all this thing, when this things happen, it happens very fast, in a few seconds. When there's a news release that is of high impact, it can move the market to go 50 to 100 pips in a couple of seconds. I can say, Jack, this happens. So what you do as part of your fundamental analysis is to find out the currencies that have high impact economic data for that particular day. I can decide that, okay, today I'm staying away from any last with this currency. Totally, so that I don't forget. Or but so time, I am not trading this currency. You have simply done your fundamental analysis. So this is something that won't take you a minute. Go to this website, check, just take note of it, and you're out. You have simply done your sentimental analysis. It's quite simple. It doesn't take time to do. Then the next is your, that's a fundamental, right? Now the next is your sentimental analysis. Just like the way the word implies, they are simply trying to gauge the market sentiment. In the market, there are always buyers and sellers. Trying to get market sentiment, trying to know the buyers and sellers, which of them are currently dominating the market. You have the buyers, you have the sellers. Which of them are currently in dominance of the market? So you can know the direction to place your trade on. Am I to go long or am I to go short? And this has to do with the strength of this individual currency at that point in time. And for you to easily assess that, by looking at your chart, you can easily tell which currencies has the stronger strength or has the higher power or the higher strength at any point in time. You can easily tell that. May look at your chart. But to aid you with that decision making, there are some currency that's on website which you can access that for making use of what is called currency strength meters. Currency strength meters. Now, these currency strength meters, most of them might come in form of a software or an application. Some of them might also come, you can access of them from a website. There are a lot of websites where you can access. If I go to Google and type currency strength meters, it will link up to a lot of websites where you can access it. And one of the websites where this can be accessed is Finviz, finviz.com. You go to Google, type www.finviz.com, F-I-N-V-I-Z. This is just one out of a lot of them where you can access this. And when you type finviz.com, it brings this up. When you bring this up, there are a lot of options here. You click on Forex. Select Forex. It's being highlighted on the screen. Click on Forex. Now, when you click on Forex, it brings up this page for you. Then you can scroll down. When you scroll down, you're going to see the 8 most traded currencies. The 8 most traded currencies and their strengths. Now, their weaknesses is in descending order. You have the first one, which is the strongest, followed by the second, the third, fourth, fifth, seventh, and eighth. And this is showing you real-time market data. The strength of these currencies, real-time as we speak. The strength of these currencies, real-time as we speak. Now, this does not give you any futuristic information, no. It gives you the strength of these currencies as we speak immediately. Why would you say if any currency gains strength against the other, they interchange on the graph? As we speak, JPY is the strongest currency now. JPY is the strongest currency as we speak, Japanese yen, followed by Swiss franc, CHF, and the list is NZD, New Zealand. Now with this, if I actually want to take a trade, I can take a pair from the strongest and the weakest. I can decide to trade any of these pairs. Now I can decide to take a trade on any of these pairs. The first one I have NZD JPY. Why do I take first? JPY is the strongest. Okay, now see what happened. NZD was weaker before, but now it's simply interchange now with USD. Means that NZD going more forward than USD, they just interchange now. NZD was weaker before, but now it's USD. All right. So I can take any of these trades, NZD JPY, USD JPY, NZD CHF, or NZD CHF, or USD CHF, because I am simply pairing the strongest currency with the weakest one. So that way, I have an advantage when trading. I am pairing the stronger one with the weaker one. So I can have an advantage when trading. When we're pairing, I wouldn't use any of these pairs. I wouldn't trade any of these pairs. Let's say Euro card or card CHF Euro AUD. I wouldn't trade any of these pairs. I want to execute a trade now. Now, reason being that Euro cards, these two currency Euro cards, their strengths are very close together. Card CHF, their strengths are very close together. Euro AUD, very close together. So I can't take any of these three, and they are right in the middle. Reason being that if I put a chart of this currency pairs now, they will be consolidating. They are not trending. And you only take a trade which is trending, that's going up or going down, not one that is ranging or consolidating. Now, these ones will be consolidating, so I won't be taking any trade on this because the strengths are close together. I'm pairing the weaker one and the stronger one. This is you simply doing your sentimental analysis, gauging the market sentiments. Gauging the market sentiment. Now, the first class on Monday, I believe that we were taught about base currency and float currency. And the base currency is the currency on the left-hand side, whereas the float currency is currency on the right. I also taught that when the base currency, which is the guy on the left, so the base currency is strong, we consider buying. I mean, something I've seen you not heard that before. It was part of what was taught to you guys on Monday. That was in one to the cloud, but I heard it. When the best currency is strong, you consider buying. When it's weak, you consider selling. Okay? Now, for the first one, NZJP1, are you considering a buy or a sell? A sell. Why would you consider a sell? Because the best currency, which is NZD, is weak. What about NZD-CHF? SL. What of USD-JPY? SL. Because the base currency is weak. Now, this is it about your sentimental analysis. Both fundamental and sentimental analysis, you don't waste your time on it. They are quite easy for you to do. You can use a minute to do both your market sentiment and fundamental analysis. Now, the market sentiments and fundamentals is still not enough reason. But the fact that JPY is strong and NZD is weak, it's not enough reason for it to just randomly click sell like that. No. Like I said, the three layers of analysis has to be incorporated together. You just need fundamental, you just need fundamental, but observe that both NZD and JPY, they have those fundamental news. So you can trade any of them at will. Sentiment, NZD is weak, JPY is strong. You have already noted that. Now, where the basis of most of your decision making is being taken from is from your technical analysis. Technical analysis, which has to do with the price action, which has to do with what we are seeing happening on your charts. That is where you make your decisions from. Now, when you talk about technical analysis, there are a lot of things that needs to be considered. One is the concept of support and resistance. Two, now, this is has to be considered. It has to do with some of the tools embedded on the MT4. Remember, I mentioned initially that the technical analysis has to do with the tools embedded into the MT4. Now, these tools, some of these tools are what we are going to be looking at. How to make use of these tools. So we are going to be looking at the concept of support and resistance. Then also market trend, candlestick psychology, now these are some of the things we are going to be looking at when it comes to your technical analysis. For now, we're going to be looking at this for now. And in doing this, you're going to be making use of some tools to do that. We're going to be making use of some tools to do that. Now, for the concept of support and resistance, which is what we are going, the area we're going to be looking at today, the concept of support and resistance, which we are going to be looking at today, you're going to be looking at one of the tools on your MT4 referred to the horizontal line tool. The horizontal line is one of the tools embedded on the MT4. And this is the particular one that we are going to be looking at today. We're going to be looking at the horizontal line tool today. About the concept of support and resistance. The other ones can follow. Other ones can follow. But first, let's look at, or let's try to understand the concept of support and resistance. Support. Now the area where price stops after moving down and then turns around is called support. Support acts as a floor limiting the further downward advance of price. The price market moves up and it moves down. It goes up, it comes down, it goes up and it comes down. It does not move in a straight line. Now, when the market is going down, when it's turning down, when it gets to a particular price area downwards, where it could no longer continue to go down, and it will tend to reverse and return back up. That price area below, where the market could not continue to go down and to reverse to go up, is referred to as support. They are referred to as support. And areas which have been identified as areas of support, these are areas where you look for entries opportunities to buy. At price areas which have been identified as support area, those areas the market gets to and it could not continue to go down to reverse to go up. That support area, these are areas where you look out for entries to buy. They simply act like a floor, limiting the further downward movement of price. That is support. The resistance to buy and support. The resistance. These are price areas where the market, after going up for some time, it could not continue to go up. It would tend to reverse to go down. Market has been going up for quite some time. It gets to particular price areas where it could not continue to go up. It will tend to reverse and come down. These price areas are referred to as resistance. This price area upward, which serves as ceiling to resist or to the further upward movement of price. They are referred as resistance. Now, these areas of resistance, these are the area where you look for entry opportunities to sell. In a simple layman term, you buy at support and you sell at resistance. You buy at areas of support and you sell at areas of resistance. You buy at support and you sell at resistance. You're looking at this chart diagram on the screen. The areas upward labeled as resistance are the areas that the market went up and could not continue to go up. And they are being reversed to go down. Those areas are referred to as resistance. And that is at the point where you look at entry to sell. Then areas with an arrow pointing upwards, labeled as support, are the areas, price area, where the market could not continue to go down. So they are being reversed at those areas to go up. These are the areas that you buy from. Now the horizontal lines marked blue. The blue horizontal lines are simply the horizontal lines are tools. They are tools embedded on your MT4 that you pick and place on your chart to simply identify these price areas. Now this horizontal line is not as if the lines are acting as roadblock, that when the candlestick gets to those lines, they will hit it. They will hit a roadblock there and reverse because they could not penetrate it. No. These horizontal lines are simply representing market price. That is why on any horizontal line, you see a price attached to it. You see a price attached to it. What the market is reacting to are the prices, not the horizontal line. The horizontal line there are for you. They are for you, so that you can take notice of those price areas. So simply put, at areas of support you buy, at areas of resistance you sell. But the question here is, how do I identify those areas on the charts that look like support and those areas that look like resistance? When I look at my charts, how do I spot out the areas that could serve as resistance and the areas that could serve as support? How do I point out these areas when I look at my charts? Now for the record, the horizontal line tool is available both on your laptop and also your mobile phone. And the video I sent on the Telegram group yesterday contained the same thing. It's also contained on that video where you can get that tool using your mobile phone. But to be clear to us, for you to do a good market analysis, a comprehensive market analysis, you cannot achieve that with your mobile phone. You can only achieve that with your laptop because your mobile phone does not give you the same level of flexibility your laptop will give you. The mobile phone, the screen and the content is compacted. While for a laptop, you have a more free space. So you can't attain a comprehensive or achieve a comprehensive analysis with the mobile phone. There is always going to be interferences rather. Calls, notification, the touch screen, your fingers, putting articles here and there. And the fact that the mobile phone screen is very small, so you'll be able to attain that by mobile phone. So don't deceive yourself and say you want to make use of to do a comprehensive market analysis. No, you can't do that. The uses for your phones are limited. Let us stick to that. What you can make use of your phone is basically to monitor your trade. Only when you've gotten to a particular level of proficiency, that is when you can effectively make use of your phone. And also note, nobody teaches you how to trade with your phone. Nobody does that. That is not very good to YouTube, you will see it. Nobody does that. Nobody teaches you how to trade your phone. Because you're not even expected to do that. Your phone is mostly used for you to monitor your trade. After you must have entered, you've done your analysis on your laptop or entered your trading or whatever, then you're taking your trades. Of course, you might not be able to sit down to watch your trade. You can have that trade on your mobile phone wherever you are. The absence of your trading devices, your laptop or whatever, workstation, you can use your phone to monitor your trades. That's why your phone can be effectively used to close position, enter position, do your stop losses and all of that. Only when you're going to attend for laptop proficiency, that's where you can make use of your phone without making mistakes. So when you open up your chart, yesterday I went into detail to show us a lot of features on the MT4 and how to navigate around it. So when you open up a chart like this is a chart of Euro USD. And you want to either buy or sell. You do not click buy or sell randomly. No. Something has to prompt you to either buy or sell. And the basis of all forex technical analysis lies on understanding and identifying the areas that serve as support and resistance. That is the basis. Every other thing works with it. And to do a good identify areas of support and resistance, you have to make use of a higher time frame. That is switch, as I showed us, we have time frame based on the MT4, you have to switch from one time frame to the other. That is switching your chart to a higher time frame. And higher time frame has to do with 1 hour and above. H1, H4, D1, W1, MM. That is your higher time frame. You wouldn't want to identify areas of support and resistance, and you are looking at a 15-minute chart or 5 minutes, 1 minute chart. No. Higher time frame is what you make use of. Most people use D1, then most people use H4. Now, for the purpose of this class, I'm going to make use of the H4 time frame for this. Now, the first thing you do is to identify the highest and the lowest points of the chart. So identify the highest and lowest points of the chart. That's the first thing. Now, looking at this chart, from what I can see at a glance, this is the highest point of this, and this is the lowest for now. What I can see. And you're looking at those areas where market either it was going from above, it got to below, it reversed and go up. Or it was coming from below, it got to some particular price areas above, and it reversed and go down. These are the areas you are looking at. And to identify these areas, make use of the tool, like I mentioned, called the horizontal line tool. And this is the tool for your MT4 selected. That is referred to as the horizontal line. That is the horizontal line tool. So I pick up the tool. When you click on it, when you look at your cursor, the cross on your cursor will do the tool lying right under the cross. That means that you selected the tool. So I'll pick up this tool and I'll drop it on this highest point of the market and also drop it on this lowest point. I'm trying to get the highest point it has gone to, and at the lowest point at the current time frame I'm looking at. Now, having done this, the next thing you have to do is to look at the areas where this market reverse. Areas where it reverse, went from up, it gets down, it turns out back, go down, it reverse back up, or if it was going from down to up, you get to those price area, it reverses. These are what you're looking at. And what you're going to do is that you have to look at your chart differently. You have to look at the chart differently. Now, I'm going to quickly mark up some areas on the chart. Mark up some areas on the chart And I'll simply tell us the reason why I picked up or reason why I marked up those areas. And there's another tool I showed us yesterday, which is called Crosshair. The tool I was using to pick out prices for the pending orders, which is where my arrow is pointing at. Like I said, that tool does not do anything instead of using it to move around the chart. I can simply use the tool to move around the chart. And in this case, I can use the tool to move around to see if I can picture some areas where that could serve as possible areas of support and resistance. So I'm going to quickly mark up some areas, and when I'm done with that, I will explain to us the reason why I picked those areas and why they serve as possible areas of support and resistance, and also show us how the market reacts on these areas. I'm able to pick up about 6 price areas. Now, I'm marking up this area because I'm trying to show us how the market has been acting on these particular areas. Now, those areas are placed on the horizontal line. They are not picked up randomly. No. These are specific areas where market has either coming from, let me start from here. Now, this market movement originated from down here, came down, moved up, came down to this same price again. It could not continue to go down. It went up. Let me go this thing. So this horizontal line, which represents a price, went up, came back down to it again. It could not continue to go down. It went up. Now it made its way up to here. It could not go down. It came down to this price area. Went up, came down to the same price area, could not break through it to go below. It went up again, came down, was able to break through it with enough momentum, then returned back to the same horizontal line again. Initially, here and here, it was coming to the line from above, taking support on it. But this time around, when it broke through it, it came to it from below. It came to it from below. When it broke through it, it came to touch that particular price area again. Previously, it was serving as support, but now as resistance. Let me simply mark these places with support and resistance, so it will probably make more sense. Instead of using 0 on it. And places with R will be used to represent the places that serves as resistance. Then S will represent the price areas that serves as support. Okay. Now the places marked starting from the top, the first horizontal line top. Now the first horizontal line above have served as area of resistance. When the market got to it, when it got to that price, it could not continue to go up. It came down, came to the one below, took support on it, went back up again, came right down. It could not continue to go down. It went up, came down again to that same particular line, horizontal line that was taken as support, that made that area of support twice, broke through it, came and made that same particular horizontal resistance. Now this is a singular horizontal line. This is the one, the second one. It has previously was serving as an area of support, but the point of the market breaking through it, coming back to the base, is not serving as area of resistance. Now this simply goes to show that a single horizontal line you place on your chart to represent a particular price area. Note that what the market is reacting to is not the horizontal line, but this price attached to it. The price attached to it, in fact, the market is not aware that you placed a line there. The market is only reacting to prices. The line is for consumption. For you to note that there is something happening around there. Now that area is like the price area action. Whenever the market gets to that particular area, it's that the market takes a break. That particular area. That point is an area of reversal. We are going to get to this from bottom. When it gets to that price area, it will reverse at that point to go down. And we're going to use from the top. When it gets to that price area, it will reverse at that point and go up. And so other of the rest of the horizontal lines identified. Now look at the one at the bottom, the last one. The last one, market came to this particular price the first time with the intent of continuing to go down. They got to that price, couldn't continue to go down, it went up. Came back to it again, could not continue to go down. At this point, it is taking rest on that horizontal line, taking support on it. The price area will go down and depend on support. and that price area of support to look for opportunities to buy. Now, coming down makes a second support on it, it went up. And it continued going up. It did not come out to that price area again. Now, why am I using the horizontal line to identify these areas? It's because peradventure, I open up my chart any day. Let's already have this on my drawn up on my chart. I'll open up my chart every day. Then I'm going to talk with respect to this horizontal line, the last one below. I open up my chart and I happen to find the market coming to this horizontal line, close to it. Probably I'll find this, it was somewhere around there. Somewhere around there, it has not gotten to the horizontal line. Now, I will be anticipating a buy when it gets to that horizontal line below, that price. Now, why will I anticipate a buy? I was anticipating a buy because of what happened there in the past. When the market got to that price, it tried severally to continue its downward movement, but it couldn't. Thus, it reversed and it went up. Now, coming back down to that price, I will expect the same thing that happened in the past to also happen again. But when it comes to forex trading, whatever happens in the past always tends to be the same in the future. And whatever goes up returns back down. Whatever goes down turns back to go up. Now, the only way I will not be looking for a sell opportunity at that point when the market gets here is if it gets to this price area and it breaks through it. Because I'm expecting this to happen. Come to this price area, fly around it, reverse to go long. Because of this price area, it reverses to go up. But in situation whereby when it gets to this price area, it breaks through it, and obviously comes back to do what is called a retest. So whenever the market breaks through a particular price area, it comes back to that same area to do a retest. It's just that when you have a place where there's a roadblock sort of, where you've been trying to skate through that one over a long period of time, you can just skate through that one, and you eventually did that. You eventually skate through the hurdle. You want to be so sure with yourself that you eventually skate through this place. Then you come back to that same area again to be very sure with yourself that I've skated through this hurdle. So this is always important in the market also. Whenever a particular area is being broken up, the market price always comes back to that same area again. So what is called a retest. Now the point of break and retest here, I will not be expecting this to happen to sell. But if it did not break through this horizontal line, this price area here, I will be looking at a buy opportunity. That at the point when it comes to take support on it. When it breaks through it, comes back to take resistance on it, I'll be looking for entries to sell. So that is the reason why these horizontal lines have been, that is the reason why you identify the areas of support and resistance, because you want to have an edge of the market. You don't want to be trading blindly. Trading on our empty charts, you are simply trading blindly. These areas that is identified as areas of support and resistance serves as your home. It serves as your home for instance, you're going up a mountain. You don't just go to the bush and start shooting sporadically. No. When you get to the forest, the first thing you go to do, you go to look at those places where you set your trap first to know if you actually caught any meat. Those traps are these areas you identify in the market and market comes to. So those are the areas. Those are the areas where you should be looking at getting a buy opportunity or securing a sell opportunity. These are the areas where you do that. The areas to secure a buy opportunity and the areas where you secure a sell opportunity. And what makes a particular price area valid? Now, when you scroll backwards, you should also see that the market is also respecting those particular price areas. Not just in the present where you're looking at. So you're just seeing that the market is respecting those particular price area. That is what, like for this year, for instance, this was July. Something as support here. This was August as support. That same August, something as resistance. Look at it here again. A single horizontal line, price acting on it severally over time. That is what makes a particular line or particular price area valid. And there is nothing like I said, what market is reacting to is the price attached to the line, not to the line itself. That means the horizontal line cannot, a singular horizontal line placed on your chart can either serve as support or as a resistance. It all depends on what the market is doing on it, how the market is reacting on it. Is the market acting on this from above that is taking support, or is it acting on this from below that is taking resistance? And remember that the concept of support resistance is the key. It's the basis of Forex technical analysis. And the only way we can get this right, the only way we can be able to get to understand this perfectly is if we're able to do this on our own. The duty of the instructor is to simply open your eyes and guide you and tell you what to do. But the understanding and assimilation lies on the student to go and practice and do that on your own to perfect the needs. Now, more on how to draw or define areas of performance resistance. The videos that we have, the recorded videos. You know, this class that we have been having since on Monday. There's always a recorded video for this class, which is available there on the website that you can always go to and watch. This particular video, support and resistance, is also there. That's the longest video here. That's the longest video on the intermediate courses. Longest of about 25 minutes, very long. It details everything about how to identify resistance, how to pick the horizontal lines, how to draw it, even how to edit the line. That video is one more detailed than this class I'm having now. It's available there. That was why we were sent some more details when we start this academy for us to have access to that. Yes.